man, I'm living aspiration. Cutting off heads, I'm straight with decapitation. Y'all boys.
We're back again here with another video, and I just want to continue off the investment video that I did about last week and a half, and I want to dive a little bit deeper with stocks and just explain what it is, what you get from owning a stock, and then from there, and then the different types of stocks as well. There's more than one. So my goal with these videos is just to make it as simple as possible so you guys can get the basic understanding of finance, because honestly it is not as complicated as people make it out to be. You know, when we get caught up in the terms and the jargon of it, when we really break it down, it's actually very simple. So my goal is to help you guys build wealth, and if I can share as much knowledge as I can and make it as easy for you guys to understand, then that's great, and that's the goal I have with sharing these videos. So as I mentioned in the last video, so what a stock represents is a stock is just an ownership interest of a corporation. So when we say, you know, you have Bank of America stock, you have an ownership interest in Bank of America, right? And then the units of stock are called shares. And how many shares you own of a company is directly proportionate to your ownership percentage of that company, right? So once again, the stock is just an ownership interest in the company, and then the shares are the unit of stock. And your ownership interest in that particular corporation is directly proportionate to the amount of shares you own of the company. So with that, you have common stock, which is what we're describing here. This is common stock. And with common stock, you have the potential for your money that you invest to appreciate. So if you put in 5,000 and then the stock is growing, let's say it goes from 20 shares to 40 shares, your 5,000 has now doubled. So you have that capital appreciation part. And then if you own a corporation that gives out dividends, like I said in the last video, let's call them paychecks to make it simple, then you're also getting interest quarterly on top of your money growing, your capital appreciation. So there's two ways of incomes from, this is with dividend companies, because a lot of times if you invest in tech stocks or growth stocks, they sometimes don't give out dividends, so you only get that capital appreciation, which isn't bad. But if you also get dividend companies, you get that dividend and the capital appreciation. So, and that's with common stock. Now you'll hear that there's preferred stock as well. And with preferred stock, you don't get that capital appreciation. You just get interest, right? You get a higher rate of interest. So, and you get that paid to you semi-annually. Now with common stock, you have the ability to vote for the board of directors, so you see that you are an owner in the company. You get to decide who the board of directors is going to be. You get the chance to vote on it, and your vote is stronger with the more shares that you have. You have a higher voting power versus those who have less shares. So with that, right, you can directly choose who the board of directors are going to be. You can also vote on if a company should merge with another company. You get to have a vote in that. You have a say in that, right? So it's not like you just buy these stocks and you're not involved with the company. No, obviously you're limited to a degree of what you can do, but you get to vote on certain aspects of what this business does. Two, you get to freely transfer your ownership, right? We see it all the time. People are trading their stocks. There's no limit to it. You can freely just trade it if you want. You can sell it tomorrow. You can sell it then, right? So it's highly liquid on top of that. If you ever needed the money, right, you can get rid of that tomorrow. It's not like, you know, some other assets, like a house can take months to sell the property. No, stocks, you can get that done immediately, right? Because it's on a stock exchange. There's always these buyers and there's always sellers. So you can freely transfer your right of ownership. The third thing is that you get the right to inspect the books of the corporation. And you can see that with, we call them 10Ks, which are yearly reports of the company. It lets you know of the conditions of the company. How much assets do they have? How much income did they bring in this year compared to last year? What products they sell. You can learn so much about what the company that you invested in does. Sometimes we don't know what exactly the company we're investing in, what they do, what products do they have, what services do they have, where are they located, who's their management team. And the 10Ks can explain that to you. So you have the right to see the yearly reports. You get the right to see quarterly reports. So you get to be very much involved and see what this business is generating, what they are doing, who's the management team, how much are they getting paid, etc. And then the fourth thing is that you have a limited liability with the company. So if the business goes bankrupt, there's no creditors that are going to come to you for what the business owes. You can only lose the amount that you put up, and that is it, nothing more. The amount you invest. So that is limited liability. And if there's a debt and then you need your assets, right, to recoup. Common stocks are juniors, right? So they are the last group of people that get paid in a bankruptcy, right? A preferred stock, you're higher up, but you also don't get the chance to have that capital appreciation as you will in dividends, even though you are getting interest. So there's common stock, preferred stock. What you're going to deal with most times, what you want is that common stock. So to sum it up again, right, a stock is an ownership interest in a corporation, and then the units of stock are shares, and the more shares you own, the higher ownership interest you have in the corporation. And stocks are great investment vehicles. They produce the highest return of all assets classes, which is a great thing to hold on to. And in the long run, stocks generally increase over time, right? I said in the last video that the goal is to beat inflation, and stocks are a great way to beat out inflation. The returns they produce are generally much higher than inflation is most years. So with the stocks, the powers you get, right? We're talking about common stock here, right? You have the right to receive a dividend if a company declares it. You have the right to vote. You have the right to freely transfer your ownership, your shares. You have the right to inspect the company, to go look through the books, as I mentioned. And that's the basics to the stock. This video is not a long one, it's simple. If you guys need more of an understanding, you want me to clarify more in depth about a certain part of what I said, or you feel like there's a way I could have made something easier, just let me know. Because like I said, my goal is to make finance easy for you guys. I want you guys to be able to understand it and just make it as simple as possible. So please let me know. And until the next video, I'm out.
Pray when it's time to ride, I never crash like Susie. Lyrics make you woozy, inspired by Juicy. The way to branch out is to kill all of these loosely.